Yo, what is up guys? So I'm back finally with another video. So in this video we are going to talk on CRT, which is the candle range theory. We'll be going step by step guide. I've been creating a lot of videos since 3 months, and I believe people have been getting knowledge. That's why I've been creating long short videos in which I have included a lot of beneficial knowledge of ICT himself, right? So now we have been understanding a lot of things, but if we are understanding CRT, we must be knowing about candlestick theory first, right? So what is actually the candles looks like when we are watching the reversals, and what candle should be looking like when we are looking for the continuations of the trend. So now there is a candle which is a continuation candle. So if candle which is closing above the external range liquidity old highs, it means we are supposedly going higher, prices would be going higher, right? So this is how it looks like. We have closed above this high, we must be going to actually continue the trend, right? So if we are closing above this candle, we are supposedly go higher, right? So this is how it looks like, a continuation candle. And if you're looking up at the reversal candle, so it looks like this, right? So if we are going below after taking out the high, it should be looking like this, a rejection candle. So this is how it looks like, a reversal candle. And another candle which is going to be created should not be closed above that high, as we want to see this price should be taking out these lows on the lower time frames, right? So now we have the sum of laws to focus on, right? So observance of the law according to the ICT, wicks do the damage while bodies reveal the narrative. Now wicks are the damage. Wicks has been taking out all these top losses which were above the highs or below the lows. And if the body is closing, it means the damage has not been done yet. So bodies tell the story that we are going higher or lower if we are closing above any time frame candles, right? Our external range liquidity. Now, keeping this in mind, when observe price closing above particular candle, it typically signals that we can expect price movement to continue upward. If we see prices closing below a specific candle, it suggests an expectation of downtrend, downward movement, right? Now, keys to power, we should be keeping these things in our mind. Closing above high prices, closing below lower prices. Rejecting after sweeping old highs or lows is equal to reversals, right? So now we have the failed CRT example. So if we have hitting the high time frame key level, which is a high time frame narrative, right? If we're closing above it, now it means we are going higher, right? So let me show you the lower time frame narrative, right? So this is what we call a failed CRT, right? We have this high which has been taken out, but we have closed above it, and we should be going higher, right? If we are looking up at these high time frame, we have the CRT high, CRT low, candle range high, candle range low. If we are closing above it, it means we are going now higher, right? Taking out the old highs. And now if you're looking up at this high, low, this is not taking out yet because we've closed above these highs, right? So this is how it looks like, a failed CRT. Let me show you the true CRT example. So now this is the true CRT example, right? We have this high time from key level. We have been rejecting after taking out these high, which is the CRT high. We have not actually closed above the high time from key level, which can be fair value gap, auto block, or either we can have some specific other high time from key levels, right? We have took out the high, right? And then we are sweeping lower to take out these lows, right? So let me show you the lower time frame narrative. It was a high time frame narrative, right? So this is the lower time frame narrative. We have taken out the candle range high. We'll be looking up at these specific candles, not every candle, right? And we have this low. So we have taken out the high, and we have been rejecting, took out the this shifted the market structure. We have this fair value gap which is above 50% of the range, and now we are looking to sweep out these lows, which is this candle low, right? This is how it looks like. So now for the understanding it better, we should be understanding high probability reversals, if we are reversing after sweeping the high or not. So we should be aiming for some of the things we should be keeping in mind to understand when we hit the high probable setups, high probable reversals, right? So let's go into the charts. I will be giving you the example, right? So now we have this drawn liquidity, and we have this high time frame key level. We have sipped out the low, right? So if we are going lower, right, so suppose this is the CRT low. Now when we are going to understand the high probability reversals, we must be understanding the SMT divergence, which is the crucial, and if we're looking for the high time frame key levels and keeping the high probability reversals in mind, we should be looking for the SMT divergences, right? So now what is actually SMT divergence? So suppose this is the silver, and suppose this is the gold chart, right? If gold is going lower, then of course the silver is also going lower. Why? Because these both pairs we're looking for are correlated, right? So if price has been taking out the lows, it would be the gold would be also taking out the low, and if silver is taking a right. So now if we want look up at the price right there, price should be taking out this low on silver, and it should not be taking out this low in gold. This is what we call SMT divergence, right? It means we are sweeping out the lows on the correlated pairs, our highs on the correlated pairs, and other pairs should not be taking out the highs or lows. When we are looking up at the market structure shifts, it means this is going to be high probable reversal, right? So now we have taken out this low in XAGUSD, but we have failed to take out this low in our XAUUSD, right? This is what we call the high probable reversal, high probable market structure shift, right? So now we will be looking for the highs to be taken out. Why? Because we have SMT divergence, shifting the structure, we have fair value gap, either breakup block, whatever you use for entry models, and then we'll be looking for the drawn liquidity, right? So this is what we call the high probable reversals, right? And now let's go and get into the high probable CRTs. Let's understand it. So high probable CRTs. To increase the high probability of CRT setups, it's essential to focus on specific candles. Here I'll be selecting 2 a.m. 4-hour candle, 8 and 6 a.m. 4-hour candle for CRT trading. And now in this method, we'll be focusing on 2 a.m. candle to determine whether to buy side, whether it will be going for the buy side or sell side, and we'll be looking for the sell side or buy side should be taking out first, and we'll be adjust our actions accordingly. If price has been taken at the highs, we must be going for the sell side momentum, and if price is taking out the 2 a.m. lows, we'll be must going for the buy side momentum, and we'll be looking for the SMT divergences for the high probable reversals, right? If the CRT high is taken out, our goal is to first look for the short entries to capitalize on the sell side momentum. And if the CRT low is taken out, our objective is to seek long entries to capture the buy side momentum. Now, keys to power: identifying the next round liquidity enhances the strength of the trade setup, though it's not absolutely essential. You can be using it, but it's not that it's essential. But if you're looking up at the round liquidity, then it would be high probable, right? So considering the daily buys, which is crucial in this trading method, as it plays a vital role. Daily buys is also compulsory, but if you're not understanding or if you're not getting it, then it's okay. You can be looking for SMT divergences and the CRT highs, looking for short setups, right? So let's go and get into the charts. I'll be showing you the live example on the charts. We have the example number 1. We have this 2 a.m. candle, right? So you should be going to the forex.com charts, right? So this is the 4-hour candle, right? We want to see price to go above it and reject, right? So this is the candle range low, which is the 2 a.m. candle, and this is the candle range high. We want to see price to go above it and look for the reversals, right? So this is a candle range high, right, and candle range low, right? So we want to see price to go either above it or lower, right? And then we'll be looking for the reversals in the price. So we want to go to 5-minute charts, right? And let's see what is going to happen. So we have this candle range high and the candle range low. So let's see what is going to happen. So we just have swept the high. We want to see this fair value gap to get inversed, right? Or either this low to be taken out. So this is where we see the reversals, right? So let's see what is going to happen. So we have hit our inversion fair value gap and want to see this low should be taken out, right? Okay, we have taken out this low and we've closed below it, right? And now this is what we call the market structure shift, right? So we want to add from this order block, or we can be adding our positions from this order block, right? Which is this order block right there. And this is what we call the order block, right? Let's add our positions. And then we'll be putting our stop loss above it. We can be targeting these CRH low, but we would be going for 1 to 2, right? So I'll be actually looking for these order block to be filled, or these lows should be taken out for 1 to 2 as a target, right? I personally go 1 to 2. You can be taking 1 to 3, 1 to 4, 1 to 5. You can be actually looking for the premium and discount areas, right? Or either you can be targeting these lows, right? Let's see what is going to happen. So we have just hit our limit from this order block, and then let's see what is going to happen. Okay, boom, we have just hit our 2 hour. That's how it works. Let me show you another example. So this is the example number 2. We have this candle range high, right? And we have this candle range low, which is the 2 a.m. candle range low, right? We want to see price to trade above it or below it, then we'll be looking for the reversals, right? So we should be going for a 5-minute chart, right? So let's see what is going to happen. We want to see price to trade above it, right, or below it. Let's see what is going to happen. So we have just took out the high. We want to see price to create a market structure shift with displacement, right? No displacement, no entries, right? So there we can see we have this order block been followed, right? But we have no fair value gap, so there is no displacement. It means we are likely to go higher, right? So we have just taken out this high right there, and now we want to see this low to be taken out, right? And then we'll be just targeting these lows, right? So we have this fair value gap. Now if our fair value gap is 2-time mitigated, then we are most likely go lower, right? So let's see what is going to happen. We have been just going to the sell side momentum after following this fair value gap. Now we have this breaker block, right? So we can be entering from this breaker block or either from this fair value gap. So just enter from this breaker block, and then we'll be putting the stop loss above it, and we'll be targeting these lows, or we can be just minimizing our stop loss, right? So now we have the 2R, or either you can be putting the risk according to your risk model, right? You can be avoiding these setups. Why? Because this is not giving us a good risk to reward ratio, right? But like if you are going from this fair value gap, then it is okay. But like if you are finding these setups, you can be just ignoring these setups, because these setups is no more risk to reward, right? So that's why I also ignore these setups. So let's see what is going to happen, if it is working or not. So we just have hit the CE level of the breaker block. We can be also entering from the CE level of the breaker block or from the bodies, but if price is not reacting from the bodies, then we should be, like entering from the VIX. Okay, so let's see what is going to happen. We have just hit our limits right there, and then we have this fair value gap again. So let's see if it is hitting our target or not. So you can see we've hit our target CRL, right? So that's how we trade CRT.